Hey guys, welcome back. In this video, we are talking about betting against AMC, the 12-month price target, how shorts have nothing left, and many more in this video. Now we're starting off with this. Imagine betting against a company that keeps finding new ways to fill seats. Now live concerts at AMC theaters nationwide. So we talked briefly about this yesterday and we knew this from the earnings. Adam Aaron essentially wants to go into concerts in the theaters. And this is obviously very, very big. The reason for this is because when you take a look at what this can bring us, it's going to increase our revenue and profit drastically if it goes successful, in which I really do think it will. You can see, think about this for a second. Concert tickets, $40 to $75. Nationwide theater reach, full concession sales, real-time audience interaction with artists. Now, the reason why I say that this can really snowball into something that will be great is because this will be an extra way for not only AMC to make money, but also the artists themselves. And if this is something that will then prove to be a very profitable business, a lucrative business, then we're going to see more and more artists obviously partnering up with AMC. We've already seen AMC in the past and how successful it was with the Taylor Swift film, and that was firstly underneath the AMC film distribution. Secondly, that was on #1 merchandise sales, and so you can imagine how if we get even bigger artists that are coming into this, how important that obviously would be. And so on top of what everything else that AMC has already been doing and how successful it is, the fact that shorts are trying to short AMC, thinking it's going to go bankrupt, thinking it's going to have no revenue, thinking there is no innovation, well, clearly they are wrong. We have to understand is that if some of the examples that are obviously being given in this is, we have to remember when we talk about nationwide, we're talking about 300 AMC locations. So this is obviously something that's already going to be very big. There's already going to be some debut performances with some artists already. And like I've said, if we were to see this to become extremely successful and lucrative, it's definitely going to attract more and more people on. And if it does so, we're going to be seeing how then that's going to allow AMC to have a very successful future. And this is why I've said is that this, I already imagine it's going to do well. It's just a matter of extremely well, super well, or the best in the world, right? And so it's just about what on the scale it lands. And so I'm going to keep a close eye to this, of course, and as should everyone. But this is something that I'm definitely excited about. And it's something that's really going to elevate AMC to the next level because it's going to be a massive new revenue stream. Now, on top of this is that recently, and again, going back to why would shorts ever bet against AMC, we added 2 new revenue streams in a few days. Firstly, the AMC and Netflix Narnia for Q1 2027, and now the exclusive arena AMC revenue. So we've already talked about the exclusive arena. That's obviously with the theater concert. The second thing is to do with the partnership with Netflix. Now, bear in mind that this is for a partnership in Q1 of 2027, but we talked about how this is actually very promising and it very likely can mean things to happen this year as well. What it means is obviously the fact that we're seeing streaming services right now willing to be actually airing some of their series out first in theaters as opposed to their own platform. That itself is already the biggest turnaround within this industry. What was used to be talked about how Netflix was going to be kind of the destroyer of AMC, we're now seeing them come to AMC and ask for the airing of their film. So that's obviously very good. But not only that, is that because of this, it very likely could start to the beginning of multiple other streaming services. Bear in mind, there isn't just Netflix as the sole streamer within the industry. There are, of course, other streaming services. We've got Roku, we've got Disney, we've got plenty of others that are within the industry. And so if we are seeing them also see this as an opportunity and come to AMC, which they very likely will once again when it proves to be lucrative, and we have already seen how well it has done, this is something that's going to attract even more people. And so these 2 new revenue streams that's opened up for AMC, not only are they already good now for what we can see, but you have to remember the potential that they have, because there is so much potential, there are so much collaboration opportunities that are within these, that what we are doing. And if we attract the right people, and if we have that incentive, then it's just going to become bigger than anyone can imagine. And that's going to add on to revenue. That's going to add on to profit. Ultimately, it's going to pay off debt, make more investments, issue out dividends, and many, many more. And this is why I've said this is something that AMC is taking and elevating themselves to the next level. We've already seen recently how well AMC is doing with the theaters. Like we said, we're seeing it being sold out. We're seeing how people are choosing AMC. We already have the biggest market share in the industry. More and more people are willing to go to AMC right now because of the fact, and this isn't just because apes and investors of AMC, but because AMC has invested into premium screens that is just attracting the audiences within the industry. People want to go to premium theaters. It's not a matter of because they invested in AMC that they're going to AMC, but rather because AMC is the best choice out of all the theaters. And that's why they're willing to go to AMC. Another big thing is what we've seen recently. Again, more institutions to be buying. Firstly, what we have is Robert Citron from Discovery, who have bought into more AMC, has increased their shares. You can see previous 32, now 46. And what we also are seeing right now is just the fact that institutions have been buying. This is something that we have been seeing. Again, the media is telling you, stay away from AMC, sell your AMC. AMC is going bankrupt. No one is ever going to buy AMC. That's what the media articles are saying right now. But the truth is, more and more people, more and more institutions, wherever it's individual investors, wherever it's institutional investors, right? They are all buying into AMC. And more importantly, on top of that, is the fact that the people who have bought AMC, especially the institutions, they have not been selling. They have actually been holding onto their shares, and some are even adding, like we've given the example here with an 8% increase. These are very, very big purchases. And it's how we talked about, it's because they've realized what's happening with AMC. It's because they've realized the potential there is with AMC. And this is ultimately what we have been talking about for a very long time. Institutions have been wanting the shares of AMC for a very, very long time. The demand for AMC shares is greater than we think. Now, for some, it's easier to get AMC shares because they are pure long on AMC. They just want to long AMC. They just want to buy shares of AMC. And for people like that, it's obviously easy. Now, bear in mind that maybe they have been buying synthetics, but nevertheless, they're buying into AMC. The other reasoning for why the demand for AMC shares is so great is because there are short sellers who are trying to cover their short shares by trying to buy AMC shares, and they are finding difficulties. And it's why we see them realizing that they can't actually buy these shares. They can't actually cover their short, which is the most important part. And that's what they're struggling with. And that's why they're trying to create the synthetics to suppress AMC. That's why they're trying to create the media articles to get you to sell your AMC so that they can come swoop in. Because we've already seen how more and more competition there is for AMC shares. And now, furthermore, we talked about recently as well, an upgrade in the price target. We can see with a 250 12-month price target, where analysts are factoring expected box office and revenue growth in 2026, expanding PLF, driving higher perpetual revenue and margins. For those of you who don't know, it's the premium screens that we have talked about in the past before. So firstly, we're seeing an increased price target on AMC. Now, for me, I still think it's ridiculous that they're given a 250 because obviously the price target should have been updated a long time ago for AMC. The price target should have been a buy for a long time for AMC. But in my opinion, I definitely don't think it should be 250. Now, there's a reason for this. Firstly, we talked about where one of the reasons why they give a low price target is that they realize that AMC is about to run. And they know that if they don't do anything, then AMC will continue running. So what they try to do is subconsciously set a barrier where they tell you that 250 is the highest AMC should be. What that is trying to do, and we've seen them do this in the past before, is that when AMC does go to 250, then you start to think that it's overvalued. You start to think it's overpriced and you start selling. Now, I'm not saying that this is for every institution out there, but what we've seen is that a lot of the media articles have definitely been used to target AMC, and that's something to be expecting. Because the reason why I say this is when you account everything that AMC is doing right now, we definitely are looking at a higher price. When you look at our competition and how we are beating them and how we're only going to get higher and bigger, it really just doesn't make sense for us to have such a low price target. Now, some of the reasons we talked about in terms of why they are giving the update, and again, ignore the target price for now, but understand just how well AMC is doing. Q1s were much stronger than expected. The North American box office recovery is gaining momentum. The debt risk appears more manageable. Investors are starting value AMC's newer business initiatives. And this is exactly what AMC is doing right now. Again, ignore the price target for now and just realize how well AMC is doing. Realize how they're beating Q1 and how they're going to beat Q2. Realize how this is only going to get bigger because what the industry they're in is accelerating. Understand that the debt problems that people have been talking about for a very long time, it's getting better and better. And then fourthly, what we are seeing is how they're investing into new infrastructures, like we've seen with Arena, like we've seen with others. These are the ultimate things that you need to be looking out for AMC. And we're already seeing how the suppression is trying to start, where we're seeing the short shares availability go all the way up to 10 million. Now, the reason why this is important is because firstly, it was at 0, then it shot up all the way to 10 million. And the reason why they're doing this is because they realize that AMC is actually doing well right now. They realize that people are viewing AMC as bullish. We're seeing price targets being set, and we were seeing how AMC was actually going up before we were met with the 10 million shares. Furthermore, what's important about this is that it was on multiple different platforms as well. After a full day of 0 shares shown available on Fintel and IBKR, Fintel shows 10 million just became available, and IBKR 22.4 million just became available. Now, some of the talks about this is that what it could be that Discovery is actually lending out their shares. Now, some of the things that people are perhaps thinking is that it's an intent to lure shorts to increase their short pressure, and when they have to recall the shares, it will then obviously cause the short squeeze. Again, this is still up for debate. This is in the air, is what people are suggesting, but it definitely could be something that's very possible when you're considering some of the things that have happened recently. But the very fact that we are seeing shares available to go up, and we are seeing these people grasp onto it the moment it becomes available, it just talks to you about how shorts are desperate for AMC shares. And you can see the AMC journey over the last few years has been one of the wildest corporate turnarounds in modern market history. Now, when we take a look at how well AMC is doing, we have to realize is that critics, they focus on old narratives AMC adapted. We've already talked mostly about this, the premium formats. We talked about the Arena One partnership. We have to talk about the scale of the opportunity because of what they're doing. And so many things are happening right now. So if you want to understand why more and more people are viewing AMC as the golden investment, as the safe haven, these are the reasons why. It's a company that's extremely doing well, that has an extremely good foundation, that's continuously growing, trying to innovate, all of these things happening, it goes to talk about this. And the biggest problem people may have right now has been the dilution. But we have to understand this. This isn't dilution or management that causes a stock to flatline for over 2 years. The company has significantly reduced debt, box office is recovering, the narrative regarding streaming has changed. What I see when I look at this chart is a stock price that has been suppressed through various mechanisms, including but not limited to market maker short exemptions and typical 70% or more of trades occurring in dark pools, which as a company where at one point the majority of shareholders were retail shouldn't happen. And the reason why this is important is because firstly, dark pools offer larger institutional trades, and so we shouldn't see that for retail. But secondly, it's about how people are talking. The reason why AMC price is declining is because of dilution and nothing else. But we've already given you the example. We talked about the 70% or more for dark pool. And if you want to see confirmation of this, you can see dark pool operator Blue Ocean Technologies has accounted for 95% of all overnight trading volume since inception in June 2021. As it turns out, they have been facilitating multiple means of stock manipulation since at least January of 2023. So this is from FINRA talking about how a dark pool has been spoofing, layering, and other manipulative order entry patterns for stocks. So if you want to talk about how AMC is seeing a decline in price, it's not because of the fundamentals, but because of the manipulation that's ongoing in the market. And now, as we're saying this being called out, it feels like the shorts have nothing left. We're talking about how, firstly, AMC has done well. We talked about what they've been doing, and a pronounced short seller who wanted to see AMC go to 50 cents is clearly not seeing this happening, and it is why we're seeing him raging. But it also goes on to talk about how these short sellers truly have nothing left. But the manipulation obviously still stays on. Again, I don't think AMC is going to go to 50 cents. I don't think AMC is going to decline to that 0.93 again, but I definitely know we're going to face manipulation. You can see the comparison between the two. AMC down 2%, whereas Cinemark and IMAX are up 0.83 and 1.23 respectively. This obviously isn't what we should be seeing. This is the pure manipulation that's ongoing in the market. But it goes on to talk about how if there is still manipulation, it means that the shorts are still trapped. And there is no reasoning for why we're seeing the price go down, apart from the fact that perhaps people are trying to think there is another ATM offering soon. However, nothing of the sort has been said about this. And it just feels like Citi is trying to put AMC down. We can see Citi maintains AMC with sell rating, raises target price to 1.2. Now, in the past, what we have seen is how everything Citi has said has been wrong. And so in this case, it's very likely they're wrong again. But you have to realize about what we've said with how they're always targeting AMC. On the other hand, GME is also facing extreme pressure where the borrow rate increases 200%. And especially with everything that's ongoing right now, this is obviously a weird thing to see. Also, we saw about 3.2 million in $37 puts for January 2028 hitting the tape. This is also something that's extremely crazy as well. And so it's something that goes on to talk about how we are looking at multiple things happening right now. We should be expecting the stuff that's ongoing. And then we're seeing how, look at this, interesting timing on this note to broker dealers and financial firms. If your settlement bank goes down, make sure you got a backup. If we're talking about warning signs of margin calls, of liquidations, this is what we should be looking at. This is really screaming that right now. As always, this is Financial Advice, and I'll catch you guys next time.